everybody. This is Chelsie Runnings, and I'm Daren Blonski. Together today, Mary is on her way on vacation, so she's out for the week. We are here with you with Sonoma Brain Trust. We're going to go over the latest and the greatest. As of today, when we're filming this, they started to shut California back down and close down any indoor seatings, etc., as it relates to COVID. Obviously, the numbers continue to spike. People continue to be concerned. We continue to see the polarization on whether or not COVID is a hoax or whether or not it is actually something we all need to be scared about. We're going to try and sort through the facts for you here as we dive into it today. I thought I would take us first into look at a couple things that I watch very closely on a day-over-day basis. The first is I will look at the Google Trends for COVID symptoms. So what you see in front of you is actually this program or this query you can look on the internet called Google Trends, and you can type in various search words. And so what I put in here is COVID symptoms in California. So what this is actually looking at is it's looking at who's searching for COVID symptoms inside of California. Well, goes to think you wouldn't go to your phone or Google and look up COVID symptoms unless you felt like you had some. So there's obviously an increase in concern, and you can see this back in March when people were searching for COVID symptoms. We have now gone back up to that level. So that's something to note. That means there's people either feeling it or getting a lot more scared of it. But that's, I think, real-time data. What's also really interesting is you sort this data by city. You can see that largely the impacts are coming from Central California, from Southern California, and from the Bay Area. So it's really consolidated into certain regions. That's why when you go into other regions that are really not being impacted, they go, what are these crazy people talking about? This is nuts. You all lost your rocker. But anyway, bottom line is COVID symptoms continue to increase, continue to be a concern. Chelsie, anything you want to add to that?
I mean, as far as COVID, I don't know about that, but in the world of real estate, we are seeing some positive signs. Forbearances are down for the third week. So people forbearing their mortgages are down for 3 weeks in a row now. Mortgage, they've hit an all-time low, averaging 3.13% at the end of last week, which is insane. I was just telling Daren, my aunt talks about how when she bought her first house, I don't know how long ago, but they had 14% interest rates. So it literally has absolutely never been cheaper to purchase real estate. And on top of the forbearances going down, we're also seeing stronger buyers. So our buyers are less likely to pull out, or as of today, they were less likely to pull out of a deal, and the sellers were also less likely to pull out of a deal because they were feeling confident in our markets again, confident in the economy. But who knows? I mean, now that Newsom is shutting us back down, are we going to go back to March where everyone's freaking out again and the sellers are not going to put their homes on the market? We expected summertime to have a massive boom in inventory and the buyers to be out there, but I don't know. We're kind of waiting, I guess, now to see what happens with these second rounds of shutdowns.
Yeah, and you can see just your point, Chelsie, on the screen what I shared with everybody. Bespoke is a group I use on their research and do a really good job, and I'm constantly reading their data coming in. And you can see that the 30-year fixed rate mortgage national average is really at the lows we saw in 2012. We're right down there in the lows. Look at that drop off, as you pointed out earlier when we were talking. Pretty significant. So say at least it's probably a great time to get a refinance, a good time to explore that if it's something you have the income to support. However, I will say that there's a lot of indicators suggesting that these rates go lower. We'll see how it plays out, especially if we start closing down. Demand's going to slow down. A lot of people that could refied, right? And so there isn't necessarily going to be that wave unless we take a next level down on rates where it makes sense. Typically anywhere from 25 to 50 basis points could make sense on a refi. So we could see more of that. We'll see. That could keep adding to support the economy. The other piece is I think is really important is that the Fed extended the PPP loans, or Congress did, because people aren't literally taking the loans out. There's still money in that pool. Remember when PPP loans first came out, everyone was like, get some. And well, they went after it and not all that money got spent. Well, the reason is because there's so many strings attached to it, right? And so if you think about it, if you're a company and you're worried about going out of business and all of a sudden you're going to take out more debt and tie it to your name, I think not. And that really tells you how scared people really are. They're not really willing to take out more debt. On top of that, we're seeing personal savings rate at all-time highs right now. Another real-time tracker we like to watch and keep an eye on is the mobility data from Apple. Again, I like to use these real-time data sources because it just cuts through all the garbage when it comes to network television, right? They're always, from whether it's CNN or Fox or MSNBC, they're always slanting the data one way or the other. And I just, for my clients and the way I work with people, I try to keep it neutral, try to stay in Switzerland, try to say, here's the facts, here's how you can look at that. And what you can see is that we've definitely picked back up in mobility trends. So what this is people literally on their cell phone, right, queuing, hey, I'd like to go to San Francisco, and they're routing to that. Well, Apple makes that data available to you. And you can see that on mobility trends are up. We're back at baseline. We're certainly seeming to follow a similar pattern. We would expect this just to continue along a pretty flat line from now. We'll see. If that continues, that's a good sign. But it also could be a bad sign if we are having a lot of cases come out. It means people aren't staying home, right? There's no drop off here, right? Newsom's shutting things down. We got July 4th upon us. I'm pretty sure most people are like, whatever, I'm going to go hang out with my family. I'm tired of this, right?
Well, and people are so cooped up, right now. I think everybody was starting to get really excited with everybody opening back up, restaurants having dining again. But the facts are still out there. As at the end of last week, the unemployment rate in California was still at 16.3%. That's that's massive. The Great Recession was only 12.3%. So last week when things were feeling good and everybody was so excited, we were still at 16% unemployment. So can you imagine what's going to happen in these next couple of weeks after we shut down again after 4th of July, when people are likely all getting together, feeling good, having a good time, barbecuing, and then these COVID cases rise again and our shutdowns maybe get more extreme? What happens then?
To add to that, Chelsie, you're dead on, right? Like, the unemployment's high, but why are we as a society not really feeling it? Because the average person on unemployment right now makes about $50,000 a year.
Wow.
Think about that, right? So if the government takes that cookie jar away and isn't giving that additional $600 per week, that's going to change really quick. It's going to change the environment.
That's set to end in the end of July, right?
That's correct. Yeah. So, just like they kicked the can with PPP loans, I think they'll probably kick the can with that one too. There is probably no politician that wants that one to go away at this moment, which will only continue to foment some of the divides we have in this country, some of the rioting, the protesting. Certainly all that's supported by more people being unemployed and having more time on their hands. That's what it comes down to. And if you're getting paid $50,000 a year to stay at home, would you go to work? I wouldn't go to work. At some point you're like, this doesn't make sense. There's not really a quality job left out there for me. I'm not going to go chase a job for less money. Maybe from some values perspective you might, but.
And people are scared. People are scared to go out and work and be around people, especially when I don't know what the divide is on who believes it and who doesn't believe COVID's real, but there's obviously a pretty significant divide. So if you're working out there where you're dealing with the public and you have people who are, not wearing a mask and you are very fearful, why would you go back to work? Why would you even consider going back to work?
I was talking to a colleague the other day, and the colleague was like, hey, my boss is making me go back to work, and they told me I either got to go on family medical leave or I got to go back to work. And she's like, I don't have anywhere to send my kids. I don't want to send them to daycare right now. So people are it's some interesting trying times. And if you get an employer who's less than understanding, well, that can create some fireworks. That's for sure.
Mm-hmm.
Should we dig into the markets for a minute, Chelsie?
Yeah. Do you think, one question, do you think since your kids have been home, your grocery bill has gone up? I feel like all I keep hearing parents saying is their kids want snacks all day, every day.
I don't know. I think generally my bills are down because we're not doing anything. And, I don't go, I try to go to the store once or twice a week, but that's about it. I haven't really tracked that. I just generally feel like, I like to just put it all on my credit card and pay it off every month, and just so I can track it all. And it seems to be way less than it used to be. Just the fact that I'm not driving as much, the gas savings is huge. I would usually go through, $100 at least a week, if not $200 in just gas back before COVID. All right, so let's dig into the market. So what you've got in front of you here is the S&P 500. This is the spider. So this is the largest 500 U.S.-based stocks, right? So people like to use this as a barometer for like, hey, how's the rest of the market doing? But it's one sliver of the market, but it's a good kind of sense of where things are at. And you see a whole lot of green, red, and black, and blue, and orange on that screen. But let me break it down and make it more simple. So in front of you right here, you see this is called a candlestick, and a candlestick represents a day, a period of time in the market. So it's price action in the market, and you've got when the market opens and it turns green, it would have opened low and gone high. That would turn it green. These little sticks here are wicks, are called candles wicks. And so this is the body of the candle. That's the wick of the candle. And so it represents price action in the market. A red one represents market goes down. Green one represents market goes up. And then these lines here are resistance and support lines. The markets trade around resistance and support. And that's really what you can see. And I think the big takeaway I'll leave you without going too heavily into this, if you want to see more of this, I post every day on YouTube or Facebook, and you can watch this at length and bore yourself to death if that's something of interest. What I will say is that it's really clear right now, we're basically in a channel. That's what's going on. We're plateaued. We're going to continue to see that plateau until information changes. So what the market's generally expecting now is more stimulus. I certainly think that's the case with the fact that things are shutting back down. So I'll leave it there for today. We're more or less in a channel. We're in a hold pattern, waiting to see, testing new highs, new lows. I'll refer you back to the other YouTube channel, Sonoma Wealth Advisors, if you want to get more insight and data on that, so I don't bore those of you who don't want to. So Chelsie, like I said, I agree with you. I think that, as we come into July 4th weekend, I just saw that they closed down fireworks in Lake Tahoe. I think you'll see more of that. It's going to be an interesting 4th this year, but I am concerned that cases continue to rise and that further weighs on the economy. And I think what the market's seeing is that that's probably the case, and they expect more stimulus because of that. So we'll leave it there, folks, for this week. That's Sonoma Brain Trust. We appreciate you taking the time to listen, to check in with us. We'll keep you posted as we keep moving through this, as things continue to change.
Thanks,
Any
guys.
final parting thoughts, Chelsie?
Make sure you like, comment, and subscribe to our video. As we do these shutdowns, we will likely have some new news, some new things to bring you guys every week now that we're changing. But make sure you follow our YouTube channel so you can get the most up-to-date facts over fear. Happy, safe 4th of July weekend, you guys, and we'll see you next week.
Take care.